imagine this. The silver market is having the year of its life. I mean, an absolutely incredible rally, pushing it to a brand new all-time high. And then, on the morning of November 28th, 2025, it all just goes silent. The entire market just stops, halted right at the very peak. So what on earth could possibly stop a global market at the very moment of its greatest triumph? This right here, this is the big mystery we're going to unpack today. You've got this incredible climb, the momentum is just off the charts, and then bam, the main exchange for trading silver futures literally just pulls the plug. The timing could not have been more dramatic, and it left everyone asking the exact same question. Was this some kind of technical glitch, a safety measure kicking in, or was it something else entirely?
All right, so let's get into the nitty-gritty. What exactly went down that morning? Let's set the scene for a day that, let me tell you, traders and investors are not going to forget anytime soon.
Okay, so here are the cold, hard facts. Right at the top of the trading session at the Comex, which is, the big leagues for trading futures on metals like silver and gold, it just stopped. For a solid hour, nothing. All activity was frozen solid. Just think about what that means for a second. The global engine that sets the price was put on ice, and it left traders everywhere, from New York to Tokyo, completely blindsided.
Now, for anyone who might not know, a trading halt is basically the market hitting a timeout button. Exchanges have these things called circuit breakers, and their job is pretty simple. Pause everything if prices start moving way too far, way too fast. So a halt itself isn't totally unheard of, but a halt at the exact second a market hits a new all-time high, well, that's what made this one feel so different, and for a lot of people, really suspicious.
To really get why this halt was such a bombshell, we have to rewind a little and look at the insane amount of pressure that had been building up in the silver market for months. It was like a pressure cooker, and the lid was about to blow right off. Just look at this number, 80%, in less than a year? I mean, that is a massive, truly explosive move for any major global asset. A move that big is screaming at you that something deep, something fundamental has changed. It's telling you a tidal wave of money was crashing into this market. And the reason for all this pressure? It really comes down to silver's unique split personality. On the one hand, it's an absolutely essential industrial metal. You literally can't build our modern world, solar panels, EVs, all of it, without silver. But on the other hand, it's been real money for thousands of years. It's a classic safe haven people run to when they're worried about things like inflation or government debt. And in 2025, both of these engines were firing at full throttle at the exact same time. In this slide, this shows you the brutal math behind the whole thing. In 2025, the world was on pace to use 206 million more ounces of silver than all the mines on Earth could actually produce. That is a gigantic structural deficit. It means every single day the world was dipping into its emergency stockpiles, which were already getting dangerously low. And you can see the result right here. I mean, look at this chart. This shows the silver inventories at the Shanghai Futures Exchange, which is a super important hub for physical silver in Asia. They were down a jaw-dropping 85% from where they were. It wasn't just low, it means one of the world's biggest buyers of silver was literally running out. So while the supply was just vanishing, demand was exploding from every single direction. It was a perfect storm. You had industrial use surging, investors were piling into silver-backed funds, and get this, even central banks were quietly buying up physical silver. The key takeaway here is this wasn't just a bunch of speculation. The real-world fundamentals were screaming that the price was way too low and that something had to give.
So you've got this powder keg just waiting to explode. Now let's look at the final hours and the spark that finally lit the fuse.
The final climb was incredibly fast. As you can see on the timeline, the real launch pad was November 27th. The Shanghai market closed at a record high of over $55 an ounce, all because of that shocking news about their inventories just disappearing. That set the stage perfectly for the Comex in New York, and as soon as trading started, the momentum just blew right past 55. And that's when the lights went out. As you can imagine, an event this wild in a market that was already so emotional, it just unleashed a massive wave of reactions. Everyone, and I mean everyone, had a theory about what was really going on behind the curtain. And the market just instantly split into two different camps. On one side, you had the bulls. For them, the halt was the ultimate proof they were right all along. It was evidence that the massive demand for real, physical metal was finally breaking the paper futures market.
But on the other side, you had the more cautious folks looking at the charts and saying, whoa, this has gone too far, too fast, and they started warning that a big drop was coming.
But online, on social media, one idea just completely took over. This quote pretty much sums it up. There's this long-held belief among a lot of silver investors that big banks have been working for years to keep the price down. So for them, a halt at the exact moment of a historic breakout? No way that was a coincidence. To them, it was an emergency brake being pulled by powerful people trying to kill the rally.
But beyond all the speculation, the other feeling in the air was just pure shock. We're talking about seasoned traders, people who've been in this game for decades, and they were caught completely flat-footed. A halt like this, in a major global market, right in the middle of a record-breaking run, it's just so incredibly rare. It left everyone scrambling for answers. So what really caused it? Well, you can kind of look at it in 3 layers. The official story from the exchange was, oops, technical glitch. Okay, plausible. A more likely reason is that the sheer speed of the price move just automatically triggered those circuit breakers we talked about. But given the timing and everything that was at stake, it was that third theory, that this was an intentional act of manipulation that really grabbed a hold of people and completely dominated the conversation. So all of this chaos brings us to the $55 question. Where in the world does the silver market go from here? Was this halt just a really dramatic speed bump on the road to even higher prices? Or was it something more, a genuine turning point for the metal? Looking ahead, it really feels like there are 2 very different paths that could unfold. The bull case is simple. If the price can get back above that all-important $55 level and stay there, it proves the breakout was the real deal. From there, $60 is the next stop. The bear case, though, is that the halt actually killed the momentum and marked a top. If that happens, you could see a wave of selling that pushes the price all the way back down below 50. And ultimately, this is the massive question the whole event leaves us with. Was the halt just a temporary hiccup in a market that has incredibly strong fundamentals pushing it forward? Or was it something more serious, a warning sign? Maybe the first visible crack in a system where the paper promises of the futures market are straining against the reality of the physical world? The answer to that question will have consequences that go way, way beyond just the price of silver.